Hi, I'm Kiri Bloor, and this is The Market Glance, where we bring the top stories affecting your trades as reported by Investing.com. Up first in today's report, and euro-dollar looks set for the limelight this week amidst widespread expectations of monetary easing by the European Central Bank and its upcoming policy meeting. The pair rose to 136.33 late on Friday following Thursday's three-month trough, trimming the week's losses to 0.13%. Tuesday's inflation report will certainly be in focus for this pair, as the data on Friday showed that the annual rate of inflation in Spain and Italy slowed in May. This release will be the warm-up event to Thursday's ECB policy meeting and press conference. Both the fundamental and technical outlooks are pointing bullish in the near term, with some big drivers on the horizon. Will Super Mario take steps to tackle low consumer price growth and cement euro area recovery? Stay tuned, viewers. Hold on to your hats, because the ECB is not the only major data player in this week's parade, with US NFP jobs data also due for release, and it could end up impacting the more gold-fingered amongst you. Gold futures ended Friday's session at the weakest level since February, closing at $1,246 as data released Friday showed hedge funds and money managers significantly decrease their bullish bets in gold futures amid a weak technical outlook. COMEX gold prices have been under heavy selling pressure in recent weeks in the wake of upbeat US economic data. Friday's non-farm payrolls report will be key for the precious metal, as it provides future indicators of the strength of the labour market and the Fed's stimulus path. Despite all of this, gold prices have gained in Asia on this Monday after data at the weekend showed China's manufacturing sector gaining pace. It's rate decision week, with policy announcements from the Reserve Bank of Australia and the Bank of England. So let's see how this lines up on the currency markets. Australian dollar US dollar has traded at 0.9270 on this Monday, following disappointing building approvals data. The pair ended Friday's session near a two-week high against the greenback, sparked by disappointing US personal spending and consumer confidence figures. With no change on the RBA horizon, insiders are forecasting support at 0.9209, with a resistance expectation of 0.9334. Elsewhere, expectations that the Bank of England could raise interest rates ahead of other central banks allowed the pound-dollar pairing losses to remain in check. The sterling came under pressure last week following reports of a housing market slowdown. However, words of sooner rather than later from a Bank of England policymaker allowed this pair to stem losses, closing at 0.54% lower on Friday. Aussie players prepped for a rate decision on Tuesday from the RBA, as well as highly anticipated Q1 growth release due on Wednesday. While Thursday's Bank of England meeting will have UK manufacturing services and construction sector data in focus, the US job figures will be the late comer in the week. With such a heavy data week, we're giving you a double dose of commodities news with a look at oil. New York traded crude oil futures closed on Friday at close to a two-week low off the back of poor US consumer spending reports and bearish inventory numbers, weighing NYMEX oil down to $102.71 by close of trade. NYMEX oil prices have been well supported in recent weeks amid indications the US economy is shaking off the effects of a weather-related slowdown over the winter. Friday's NFP data will be key to providing evidence of a sustained economic recovery. It looks as though things could be on the up for all you lovers of this liquid commodity, as a spurt in Chinese manufacturing saw a lift in crude oil prices in Asia on this Monday, marking a bullish start to the week. Well, traders, that's all for now from this report, brought to you by Dukascopy and Investing.com. Join us next time when we'll be providing all the info you need to protect your trades. Goodbye for now.